to go to the market, if you went to the market to buy, right? And somebody told you, oh, my price is 15 naira. Another person tells you for the same good you want to buy. The next person tells you my price is 45 naira. Who would you buy from, 50 or 45? Put it on the chat box very quickly. 50 or 45, who would you buy from? Who would you buy from, 50 or 45? Which one is cheaper? Who would you buy from? Good. Why are you buying for 45? Because it's cheaper. That's what we do in this market. Anytime I buy, I want to buy at the cheapest price possible. So that's one of the number one conditions why we buy and sell. Right. Now, if you're going to be the one selling, remember I told you all we have in this market is buyers and sellers. And what we deal in basically are currencies. Foreign exchange means Forex. Forex means foreign exchange. For instance, if you had to go to, let's say you want to go travel to, where do you want to travel to, Canada or US? Put it in the chat box. I know most people always prefer Canada. Canada or US. If you had the opportunity to go to one of those countries, where would you want to travel to? Type it in, Canada or US. Oh, Canada, good. Now, the point is when you're going to Canada, you cannot spend Naira in Canada, is it not? So you must most likely either go to the bank to change your money, meaning you're going to be buying some Canadian dollars, right? The way they sang that song. Don't let me sing the song. But you're going to be buying some Canadian dollars, and in the process, you're going to be exchanging your Naira. You're going to pay in Naira. If you're not buying from the bank, you go to all these black markets, abokis you see on the road, right? So the process of you going to buy from them, when you're buying from an aboki man, if three of them offers you different prices, even if it's 5 naira difference, you want to go for the cheapest price. Now, what you just did when you bought that Canadian dollar is called Forex. You exchange one currency for another currency. Let's now say you went to Canada and you came back to Nigeria. You can't be spending Canadian dollar in Naira. In our economy, you need to change it back to Naira. That process of changing it back to Naira is what we call Forex. Don't worry, I'm going to give you the notes you're going to write, but I need you to understand the basis. So just one transaction, but two currencies were involved. You wanted to buy Canadian dollar, that was what you wanted, but you had to exchange in Naira for it. So in just that singular one transaction, two currencies were involved. That's why we tell people in every transaction, two currency pairs are involved. If you understand just this basis I explained now, put in a 1 on the chat box very quickly. Put in a 1. Put in a 1 if you understand. Good. So now, another thing is, basis for selling is, also let's say you had the privilege to go into a market, let me say any market around you, you wanted to go and sell. Remember now, you're not the one buying, you're the one selling. If somebody is offering you 100 naira for a good, another person is offering you 110 for the same good, remember you're the one selling. Who would you sell to, 110 or 120? Put it on the chat box. 110 or 120, who would you sell to? Good, because why? Why are you selling? Unmute yourself at this point and explain. Why do you want to sell 120? Is it that you like one person's face than the other person? Why do you want to sell 120? Explain. So unmute yourself. You said what?
Because I want to earn more.
You want to earn more. Good. Now, anytime you want to sell in this market and you have the opportunity to sell, giving different prices, as a businessman, you should always go for the highest price possible when you're selling. When you want to buy, you want to go for the lowest price possible. This principle, the same thing that happens in your normal market, is still the same principle in the Forex market. So when you come here, you need to come with a mindset of a businessman, how you will do in your normal daily life. All right, so let's write. Number one, basic conditions for buying and selling. That's the subheading. Conditions for buying and selling. Conditions for buying and selling. Once you've written that, let me know. So now, right, once you've written that subheading, right, we buy low and sell high. Full stop. That was the summary of everything we just explained, that we buy low and we sell high. So definitely as time goes on, you will know where the low is, where the high is for you to now buy. Have you written that down? Let me know so I can call the next thing you want to write. If you've written that down, drop a 7 very quickly. Okay. Now the next line, in every exchange, be fast. In every exchange, comma, there are two currency pairs involved. Full stop. The first currency is known as the base currency. The first currency is called the base currency. Base. Full stop. Or combine one. While the second currency is called the quotes. Quotes is like short for quotation, is on your screen. Quotes. It's called the quotes currency. Quotes currency. All right. So, remember I told you you wanted to go to Canada. We used that as an example. You were going to buy Canadian dollars, but in just that one transaction, you had to exchange naira. So, meaning just for every exchange, because what you were doing was exchanging one money for the other. I'm explaining you, this one is on note now. That process of exchanging one currency for the other was just simply one transaction, but in that exchange, two currency pairs were involved. Hope you understand. So that's what I mean. Now, the first currency is known as the base currency. That's what you've written. And the second is the quotes. Now, number one rule for buying or selling is write this down. You can asterisk this. I will buy. I will buy whenever the base currency is stronger than the quotes. For sure. I'll buy whenever the base currency is stronger than the quotes currency. And I will sell. Next line, also asterisk this. I will sell whenever the quotes is stronger than the base currency. Full stop. It's just like vice versa, word and opposite. Now, this is what I mean. Let me know when you've written that down. Just drop a 6 so we can move to the next sentence. Okay, good. Now, this is what I mean. Now, on the broadcast platform, let me erase this so we can go. You see, on the platform we use for trading, it's called the broker's account. So they've already listed different currencies. All right. So everything is always in pairs. You'll see something like AUD, USD. This is one. Another one, GBP, JPY. You can see something else like NZD, that's New Zealand dollar versus US dollars. Now, anyone that comes in front, like this AUD that you're seeing, that AUD is the base because it's the one that comes first before they wrote USD. So in this particular exchange now, AUD is the base, USD is the quotes. The next one where I wrote GBP, JPY, which one is the base? Anyone that comes first. Remember, I wrote that in your notes. So in this GBP, JPY, GBP is going to be the base because it's the first one. JPY is the quotes. Another transaction, NZD USD. NZD, anyone in front is a base, USD is a quote. Let me now give you another scenario. Maybe you have an exchange like USD dollars, Japanese yen, USD JPY. Which one is the base in this USD JPY? Which one is the quote? Let me know. You can put that on the chat box. Is USD the base or is it JPY? Which one? Good. So USD is the base. Now note that when I wrote AUD USD, AUD was the base. So it doesn't matter. That one was based in the previous exchange does not mean it cannot be quoted in another exchange. As long as, because USD JPY now, USD was in front. So in this case, it was the base. But in previous exchange, where you had AUD USD, USD was the quote. But the one thing you want to remember is anyone that comes first is the base. Anyone that comes second is the quote. Now, you only want to buy when AUD is stronger, and as in anyone that is in front is stronger than the second one, which is the quote. So the question I expect you to ask me is, how will I know that one is stronger than the other, so I can know that, oh, it's time to buy or it's time to sell? Wouldn't you want to know? So for you to know, the next thing you need to do is go on your phone browser, or don't worry, let me just share from my screen here. Just go on your browser, you type currency strength, www to sites, or once you just type currency strength meter, it will take you to that site. Currency strength meter. I want to share that screen with you now. So what it means is you're going to go on your browser. Your browser is where you get that. So what I did was I went on my browser and simply type currency strength meter. Once you type it, so meaning you could use your Chrome or whatever it is, but you're going to write down the site. Now you see where they wrote www.livechat.co. That's the site. So you can write this down on your notes. So confirm the currency strength. Put it down on your notes. To confirm the currency strength, go to www.livechat. Please take note of the spelling. I'm putting it on my screen. livechat.co.uk is one of the places you can confirm the strengths to know which one is stronger or which one is. So once you put that, you can enter. It takes you to that site. You click. Hold on. Just hold on, just a moment. So many adverts. Just hold on. So once you're on the page, just click currency strength meter. You can see what's on my screen. Excuse me. There are different currency pairs, different currencies actually. The first one on my screen is euro. That's what they spend in euro now, any European country, right? Now notice that some bars are more than each other. You can see GBP, that's Great Britain pounds. It's just one bar. USD has 3, AED has 1, JPY is like having like 5. Now, what it means is at the moment, JPY is very strong. While AUD is very low, GBP is also very low. So let's say I was in an exchange that has Euro GBP. Now, Euro has like 4 bars from the screen, right? Meaning Euro is stronger than GBP. So if Euro was the base and GBP was the quote, I will be buying because the base is stronger than the quote. Now, if I was in something like USD JPY, you know, USD from the screen right now is like 3 bars. JPY is full. But because I'm in USD JPY exchange, USD is the base, JPY is the quote. Now, the rule says whenever the quote is stronger, you sell. So I would have been looking for a sell opportunity. Put an 8 on the chat box. If you understand what I just explained, please put an 8 on the chat box. Great. So one thing you want to do every day before you start trading is to come and check. And of course, this trend changes from time to time. So you might need to refresh. Like at the moment, JPY, Japanese yen, the economy is very strong right now. So their currency is strong. CHF, this CHF too, Swiss franc, that's the meaning of CHF. But you don't need to count their name. Just use CHF is okay. It's also strong. So as a Forex trader, if I was looking for what to trade, when I come here, I'll look for a very strong one against a very weak one to trade. Let me give you a scenario. Let's say you were playing a betting game. One of the strong teams I used to know is Man U. I don't know if they are still strong. I'm a Man U fan. Now, if I were to play and I want to put my money on betting, I'll go for Man U, assuming they are still as strong as before. And I'll go and pick a very terrible team, like a weak team, like the Sunderland. Now, is there a guarantee that Man U will win against Sunderland? No, even if Man U was stronger. But by going for a strong team against a very weak team, what you've simply done is to increase your chance of winning. Do you understand? By going for a strong, so if I'm trading, I won't go and look for one that has 4 strengths, like 4 bars on Euro right now, and go for the one of 3 bars with USD. You know, Euro and USD, their strength is almost close. One has 3 bars, one has 4. It's too close. So you might be struggling. If you enter that kind of trade when both of them are too close, it's just like you betting on Man U and Chelsea. Before the end of the game, the person will nearly have hypertension because both of them are believed to be very strong. So in that case, your mind will not be at rest, and that game can go both ways, meaning you could end up losing your money. But by going for probably Chelsea versus all these Southampton, all those teams that are not strong, it increases your chance. Now, let me say this before I forget. You see, in the Forex market, there is no guarantee. But by looking for strong economies against weak economies, which are represented by their money, right, is you increasing your chances of winning. If you understand that analogy now, please drop a 1-1 on the chat box. Drop 1-1 on the chat box. Good. So write this down. Notes. In your notes, put this down in your notes. Notes. Whenever you're using currency strength, whenever you're using currency strength meter, always ensure at least 3 bars difference. Let it be in case of one being 1 and 2, let it be at least 3 bars difference. So that way you can tell that, oh, this one is clearly stronger than the other. Let it be at least 3 bars difference when you're using it to make decisions. Let it be at least 3 bars difference. Full stop. So if you've written that down, let's go for another condition why we buy and sell. If you've written that down, please write an 8 on the chat box. Okay. So what we just did was just one of the conditions why you buy and sell. There are still other reasons. Now, another reason is, write this. We buy at support. We buy at support. We buy at support. In front of that support, put floor in brackets. We buy at support. At support. Or you can put support zone. We buy at support zone and sell at resistance. In front of that resistance, put roof. Full stop. So if you've written that down, if the rule says we buy at support and we sell at resistance, the next thing I expect you to ask me is, okay, what is support? What is resistance? So that when I know that we are at support, I can jump in and buy, right? When we have resistance, I can jump in and sell. Now, another thing that you need to note, I'm going to tell you what a support and resistance is briefly before when you write it down. Another thing you need to know in trading is, like I told you, there is no guarantee. It's just like me asking you, what was the guarantee that when you slept last night, you were going to wake up today? Was there any guarantee? If there is a guarantee, put yes. If there is a no guarantee, put no on the chat box. Don't tell me I believe in God, so I know I'll wake up. Don't worry, everybody. Yeah. But there was no guarantee that you were going to wake up today. But do you know that you still made plans for today? Even though you were not guaranteed. Why did you make plans for today? It's simple, because every other night you've slept so far, you've woken up, is it not? Exactly. So that's why people plan. So even though there is no guarantee, but there is probability that you wake up, because every other night you've slept, you've woken up. Now in the Forex market, there is no guarantee too that the market is going to buy at support, or there is no guarantee that it will sell at resistance. But because every other time so far up till now, each time market got to a support area, it bought. Each time it got to resistance area, it sold. That's why we too buy. Now, because there is no guarantee, another thing you need to know is, you know the way they say in the mouth of two or more people, something is established. If you ask the first person, that's why you have more than one condition for buying and selling, so that when you want to make a buy decision, you won't just buy because they said the base currency is stronger than the quote. That's just one, right? If you now confirm again after seeing that the base currency is stronger, you now check, okay, is the market around the support zone? Yes. That's like another confirmation. It's like me coming to Tunechi's area. Tunechi, where do you stay? Where are you based? Where are you based? Excuse me, where are you based? Put it on the chat box. Put it on the chat box. Where's your location? I'm waiting. Where are you based? Okay, currently at Surulere, good. Now, let's say I've never been to Surulere before in my life, right? It makes sense if I ask someone and they tell me, oh, you get to Yaba, from Yaba you get to Surulere. There is no guarantee. I've seen a lot of people who will misguide you in Lagos and tell you, give you a wrong address. Haven't you seen it? They'll be telling you, go straight. Do you get, if you've ever encountered something like that? But there was no guarantee. But by the time I asked the second person, and the person still tell me, oh, get to Yaba. From Yaba, you can get to Surulere. Now, even though I don't know the two of them, my chances of them saying the truth is likely. By the time I confirm from a third person, and the third person still says, get to Yaba. Now, there is no guarantee. But by confirming from three persons and they're all saying the same thing, there's high probability that if I pass through Yaba, I'll get to Surulere. That's the same thing we do in the Forex market. So if I want to buy, the first thing I consider is the base currency stronger than the quote? Yes, I go to that site, currentlifechat.co, and see, oh, it's stronger. Okay, good. That's just one. I'm going to go and confirm the next thing, which is what I'm telling you now. We buy at support. So I'm going to check again. I want to buy. Is this market at support? If it's at support, that's like another second confirmation. All right. So that's how you make decisions when it comes to buying and selling. So the rule says, we've written that we buy at support and we sell at resistance. Now, support is like the floor. Now, let me give you a scenario. Anytime you buy in the market, your goal is that after I've finished buying, let this market keep going up. If you buy a land at 500,000, if it increases to 600,000 after you finish buying it, you make profit, is it not? You are making that profit because the moment you bought low, it started going up. So anytime you buy in this market, your goal is, Father, as I've entered this buy, let it keep going up. That's the way you're going to make profits. That's why we say we buy on the floor. Because if you throw a ball on the floor, what's it going to do? It's going to bounce up. because you threw it on the floor. So it's from that floor, it starts going up, right? If you throw a ball to the roof, what will it do? It will come down, right? So when we sell, our goal is after I finish selling, let this thing start going down. That's your own prayer. Don't worry, don't bother your head about, why is it going down? Am I making profit? Yes. When you are selling, you want the market to keep going down. Down. That's your, say, if you were buying fuel, you bought that, you sold your own fuel at 500. The next day, fuel price dropped, and some people are selling at 400. Who will make more money? Was it not you that sold at 500 before it started dropping? So that's the idea in the market. When you sell high. Immediately you finish selling, just be praying that let this thing keep coming down. So the more it comes down when you're selling, the more money you make. But when you're buying, the more it keeps going up after you bought low, the more money you make. If you understand that, please put a 9 on the chat box. If you understand that, put a 9 on the chat box. Good. So now it's time to write. You already wrote we buy at support and we sell at resistance. So what I expect you to ask is, what is a support? So that when the market is there, I'll know it's the high time to buy. And what is a resistance? So write this down. Next line. A support is any zone or area the price has gotten to. You can check your screen for what I'm typing. A support is any zone or area that price has gotten to at least twice in the past. Twice in the past, and started buying or going up. Remember I said when you buy, you want it to go up, full stop. So a support is any zone or area that price has gotten to at least twice in the past and started buying or going up, full stop. So resistance is just the opposite. So let me call resistance. I believe you must have written as support. Well, a resistance is any zone or area that price has gotten to at least twice in the past and started selling or going down. Full stop. So remember, this thing you call rate. You know, when you want to exchange, you go to an aboki man, you say they give us rates. That rate is actually a price. Hope you know. So that same rate is what we call price in the market. That's our entry price. That's the price you're entering. That's the price you're exiting. So if you go and buy dollar from an aboki man, it tells you, and you ask aboki, what's in your rate, and it tells you 640. That 640 was like the entry price. Do you understand? That was the price you bought it. So we call it entry price. That's the price you entered the market. If you understand, and you've written the note I just called, please drop a 10 on the chat box. Good. So now let's proceed. Remember, I told you this is just the you a 9. You said I don't understand. Unmute yourself. You can unmute yourself and say what you wanted to say. I don't understand what you have on the chat box.
I didn't get the number you said. I didn't get the number you said. No.
Okay, no problem. But you've written everything down so far, right?
Yes, ma'am.
Okay. So do you have any question on this before we move to the next thing? On the
This
WhatsApp?
kind of like taking down on attending.
You said what?
This is kind of like the second time I'm attending class.
Oh, okay. You watched that beginner's video. Okay, so it's going to make a lot of things quite good. But normally I still start with everybody from the beginning, so it's fine. Now, note another thing you need to write down is there are some words. When you're in the market, when you want to buy, is every time we say we are buying. So you can write this down in your notes. Another word for buy means long, as in long, normal long. When you say something is long, those are the words traders use sometimes. So you understand that, oh, they still mean they want to go buy. So you can write this down. Buy long. Then when you hear things like the market is on an uptrend, uptrend means it wants to go up just from the name uptrend. And when something wants to go up in the market, you want to buy. So if I'm on an uptrend, I'm looking for buy opportunities. So sometimes that might be the words we use, right? Then when we are around a demand zone, we want to buy. If there's going to be demand for something, I want to buy it. So after I buy, people are going to start demanding from me and I can make profits. You get? So those words means buy. Why for sell? Remember I told you anytime you're selling, you want the market to keep going down. So other words for it are shorts, downtrend, supply zone. Okay, stop. So I've written that down.
Yes, ma'am.
Okay. Now, something more like okay, don't let me give you that now. So let's go to type of trade. Type of trade. Have you watched this too in that video? The types of trade. Anyone got answer? Okay, but let's still take it so at least I won't have to spend more time on that. Types of trade. All right, we have both the direct buy, otherwise known as market execution. Market execution. And then we have pending orders. So just like the name says, when you say you do market execution means you're buying at a price given by the market instantly. But you all need to always understand that when you go to the market, who gives you a price is the seller. So whatever price the seller gives you is what you're buying at. But in the market execution, the seller determines your price for a buying order, right? Like, yes.
Is it same as instant execution?
And what I'm saying right now is still instant execution. Market execution is the same thing as instant execution. That's just another name. Instant execution. So meaning you are buying at a price determined by the markets. You are not the one that determined it. Why for pending orders? It's like you saying, oh, I'm not buying this thing until it comes to so price. So until the market gets that price, you and the market, you'll be looking at yourself. But because you might not be there when it gets there, you can set down the price. It's just like you going to someone's shop and saying, Oga, take this money down for me. Anytime this market gets to help me and buy it. So it's like whether you are there or not there, because you set it down, you put that money aside and given the person. When the price gets to that place, they are going to help you buy, whether you are there or not. That's for a pending order. Do you understand? So that's the difference. But for pending orders, we now have 4 types. And the way we place a trade for a direct order is different from a pending order. You've downloaded the MetaTrader, is it not?
Yes, ma'am.
Okay, good. So you're going to be sharing your screen. I'm going to make you pause so you'll be able to, you click on that share where you have share on your screen, and you now go to that your MetaTrader. We're going to do some works. Don't worry, I know you can't wait to start doing practical. But the thing about this market is don't be in a hurry. Just take your time. Trust me, if you take like 2 months, 3 months practicing like a mad person, you can make someone's income they've been trying to make in 5 years, and you can compress it and make it in 6 months. That's what's possible in this market. Okay, so I've made you co-host. So click on that share button on your screen. I'm going to stop sharing from here so you can share. Click on the share screen. You see where they wrote share screen on your screen. Good. Now go to that MetaTrader app. You were there now. Go back. Okay, let me see. Go to that 3 lines at the top of your screen. To your left, there's white lines, 3 white lines. Good. Okay, I want to see the one you created. Okay, MetaTrader. Now let's go and create because this one sometimes misbehave. Okay, still go back, click on quotes. That quotes where you have quotes, the list of currencies. Now, those currencies are just short. You can see Euro, US, GBP. You don't have plenty. Anytime you want to add plenty, you see where you have that plus. There is a plus sign at the top of your screen. Click on that plus sign. Yes, click on that Forex folder. Now, you see all these AUDJPY, just be tapping it. As you're tapping it and it's removing it, it's automatically getting added. So add more. Add all of them. You're seeing them. You're tapping. Good. Okay, so we can go back. Now you have more. Good. Now, let's say we wanted to do an instant order. Let's just, we are not following, we did not analyze anything. We did not check whether markets are support or resistance. We just want to click anything. So just click on that GBP USD or USD JPY, USD JPY rather. USD JPY. Just click on USD JPY. New order. Anything. It's like you're used to it. Good. Click on sell. What you just did was an instant execution. You were not the one that determined the price. The market gave you a price, right? Now, underneath where you have USD JPY, you see where they wrote one. You can see this USD JPY on your screen that you sold. Under USD JPY, you are seeing a number. Call that number out. Call the number under USD JPY.
133.08.
Good. You see that number you called, any number or directly after the currency pair you are trading is always the entry price, the one to your left. So anytime you enter a trade, don't come and ask me for the entry price zone. So you can write it down. Notes. The entry price is always the number under the currency pair because everything has a lot to do with your entry price. Remember, if you bought a car for 500,000, I gave it out for 9. You will make is based on the fact that you are making it because you bought your own at 500 and sold higher. So for every trade, it's important you know the price you entered. That's how you're going to know whether you're making profits or not as time goes on. So this is an example of an instant execution. You just enter the market gave you price. It's not as if you wanted 3.28. Now, for a pending order, there are 4 types of pending orders, right? Did you also learn that from that video? Or should I'm thinking whether I should not go into it, or I should dive in very well.
I've seen all of it from the video, but it's cool that just put it on the edge.
Okay. Now, the same place you bought, go back like here, go to that code, like you want to place an order. Good. When you have those buy, sell, those 4 are the type of pending orders you have. Anytime you select them, click on sell limit, for instance. Click on sell limits. So you'll see this time around, it gives you a place where you can put your price. There's price on the screen. So whatever price they give you is what you use. But what is important is in understanding why you are using sell limits or buy limits. That is what is important, because if you put any price that does not tally, it will not go, it will not let you place. Now, for instance, buy limit, just write this down on your note very quickly.
Okay.
I won't want you to come back and meet me later. A buy limit is an order to buy. A buy limit is a pending order to buy.
Okay.
When the market is presently selling, comma, but you've seen the price approaching a support area. You've seen the price approaching a support area, comma. Therefore,
Yes.
you're waiting to buy around the supports. Full stop. Notes. The entry price for a buy limit must be lower. This is the key thing. The entry price for the buy limit must be lower than where the market presently is, or than where, or you can say than the present market price or current market price. It must be lower. So when you click on buy limits and the price you're putting is not lower, it will not allow you to place that order. That's the most important thing. Do we understand, sir? Do you understand, sir?
Yes, sir. Yes, sir. Yes,
Okay.
fine.
So have you written it?
Yes, sir.
Okay. Now for a buy stop is an order to buy when the market is already buying.
Yes.
It's an order to buy when the market is already buying. And you want to be sure it will keep buying. Before you join the buy. Stop. Your entry price must be above where the market is. Have you written that?
Yes, sir.
Okay. Now, this is the ideology behind it. So let me explain. You see, in a buy limit, you remember we said we buy at support and we sell at resistance. Now,
Yes,
imagine where you are right now. Your support is like the floor of your room, and the
Yes,
resistance where you sell is like the roof. Remember, I told you
Yes.
that on the floor, you can keep going up. Now, after the time you are setting the buy, let's say we number the floor 1 and the roof of your room 10. You have seen that the market has been coming from 10. It has gotten to like 4. Now, 1 is the buy area, it's like support. Because it's at 4, you're like, man, this thing, if it gets to 1, it might buy. So even if you're not going to be there, you now set that price. You set a buy limit and put the price around 1. Now, why are you putting around 1? Because before, there must have been a time in the past when it got to around probably 1 or even 1.2. You know, 1.2 is still close to 1 and it bought.
Yes,
So you're like, any other time this thing is coming to 1 point, you're waiting to buy because that happened before. But at the time you set that buy limit, remember the price was still above 1. That's why we say on a buy limit, your own price must be lower than where the market is for it to go. That's a buy limit. Now you use a buy stop Buy stop is for doubting Thomas. Sometimes you're like, I'm not sure. It's just like, asthma and whatever, they are playing match. You're like, you're not sure whether this thing will go or not. You're now waiting, let them first score one, score two. So maybe he got to support, because the truth is support can turn to resistance in this market. That floor you can break. If the floor breaks and you go under the ground and here, so you want to be sure. So when he got to one, you wanted to see that from one, he moved to two, he moved to three. Okay, you're not sure, oh, he's going up. Let me now join around three. But by the time you're waiting, you're probably waiting around 3, 4. The market was still around 1. As at that time, the current market price was below. So for a buy stop, you are waiting at the top, meaning your own entry price has to be higher than where the market is. That's just the difference. So the same thing goes for sell limits. Sell limits, your entry price is above. You are waiting at the resistance to sell when the market is still just coming up. Meaning your entry price is be above where the market is for a sell limit. Why a sell stop? You want to be sure the market is already selling before you jump in. I remember when the market is selling, where is it going? Down. So you are waiting below where the market is. That's just the difference. Do you understand that?
Yes, ma'am.
Okay, good. So I think we've handled types of trade in the syllabus. I think the next thing is pips calculation and lot size. Is your brain still hot? Should we go into pips calculation or we do it in the next class?
Remember, it's this summer.
You said what?
I said, remember, it's still this summer. I watched
I
that
didn't
video.
hear you.
I said, I watched that video. So you can see
But I didn't finish the video. I didn't finish the video on pips calculation in that first video I sent you. You need to watch the first and second to understand. So should we start today?
Yes, you started on video to say it.
Okay, good. So let's go now. Stop sharing your screen. Let me write this down.
Okay.
Let me share my own screen. So this is like it's already now, right? Pips calculation. Under this, right? A pip is a change in market price.
Do you pick that dog out?
You said what?
Sorry.
I didn't hear you.
No, that wasn't for you.
Okay, you're not talking to me. Good. And you can mute yourself. So write this down. A pip is a change in market price. Full stop. You can write a pip is a fourth. This is another thing. A pip is a fourth decimal figure. Fourth, F-O-U-R-T. Fourth decimal figure. Now, when you say it, it's like saying, first up, I hope you've written what's on the screen. When you say a peep, it's like, when you tell somebody one ball or a ball means one ball. A pen means one pen, right? So when you say a peep also, it's like saying one. But in this case, it's the fourth decimal. That would be 0.0001. Don't worry, I'll still put it down. Now, the same way you measure your body temperature, the same way driving, you measure in kilometers. Now, when prices change in Forex markets, is measured by pip change. It's like say pip. So, I used the scenario in that video. I said, all Nigerians are black. Am I correct? Yes or no? If I say every Nigerian is a black man, am I correct?
Yes,
Snitch, are you still with me? Good. Yes, every Nigerian is a black man. I'm correct. Now, that's a general term. But do you know that even in this same Nigeria, where every Nigerian is a black man, we have fair people, right?
Yes,
people that are fair in complexion. Now, those people that are fair, they are like exceptions to the rule. Apart from that, we still have albinos. Albinos are even like another case scenario. Hope you know that.
Yes,
So in the Forex market, so when you calculate pips, There are like different scenarios for pips calculation. So the way you calculate pips for all those basic pairs that are general is different from the way you're going to calculate for some currencies like Japanese yen. You know, Japan is different. They're in Asia. It's different the way you calculate. And for things like gold, I love to trade gold very well. If you see my status very well. Now, the way you calculate for gold is almost as if you're calculating for an albino. So when you enter into this trade, this is what you know. So now let's write a subheading. Pips calculation. This is like a subheading. Pip calculation for major currency pairs. For major currency pairs. Or you can say pairs with 4 or 5 decimal places. 4 or 5 decimal places. Decimal places. Now, by the 4 or 5 decimal place, I mean, if you go to your MetaTrader, you know, when you, that place where they wrote quotes, things like GBP, let's go there, Seth. I think you need to go there. I want to be sure you know this place very well. You know you've been saying you've been watching. So go to your MetaTrader. Can you tell me one currency there that you're seeing that has 4 or 5 decimal places, that the numbers after the point are like 4 or 5? Can you tell me?
The here USD CAD having.
Hey, I can't hear you.
I said this year USD CAD.
Euro USD, good. Another one.
USD CHF.
USD CHF. Okay, good one. Another one. Another one from what you're seeing on your screen.
AUD CHF.
Good. Now, all those numbers like that, when you calculate their pips, this is what you write. So write this down on your notes. 1 pip is equal to, that's for such pairs you mentioned, Euro USD, GBP USD, USD CHF, NZD USD. 1 pip will be 0.0001. Remember I said a pip is the 4th decimal place. So in maths, this is like 4 decimal place. Now after the point, decimal point, you have like zeros, 3 zeros and 1. That's 1 pip. But the truth is, who goes into the market to take 1 pips? At least extra from 10 pips. So at this point, you don't want to make mistake with what you're writing, because this is what you'll be adding and subtracting. If you make mistake, you're going to be calculating wrong thing. And you know, if you want to send 10,000 to somebody and you mistakenly added 1 more zero, 100,000, you know the gap is mad. Exactly. So you don't want to make that kind of mistake when you're calculating. So 10 pips will be 0.0010. Have you written that down? 10 pips. Look at your screen, please.
Yes, sir.
Good. What do you think 20 pips will be? You tell me.
0.0020.
Good. 50 pips. What do you think that will be?
0.0050.
Good. Now take a guess. What do you think 75 will be?
0.0075.
Exactly. So this is what you're adding or subtracting when you enter a trade. So if you that you're buying and you're like, oh, I bought this thing at 1.50 and I'm going for 50 pips, you'll be adding this 0.0050 to it. Whatever number it gives you, I'll tell you I will modify, but that's not into this class. So this pips calculation is what you use for all those basic pairs, like the one I told you about. Now, for currencies like, let's go to, no, let me even give you 100 for this one. What do you think 100 pips will be? Yeah, tell me. What's 100?
0.0100.
0.0100. Yeah, that's correct. 100. Now the same thing for 120 will be like
0.01. 0.010.
0.0120. Good. Now, this is for, remember, major currency pairs like NZD, all those ones we mentioned. Now, let's go for pips calculation for JPY pairs. Pip calculation for JPY pairs. Pip calculation for JPY pairs. That's like the subhead, you know. Pips calculation for JPY pairs. So what it means is any pair you enter on that your MetaTrader that you see they have JPY, maybe AUD JPY, NZD JPY, Euro JPY, CHF JPY, in fact, anything that has JPY. This is how their own pips look like. 10 pips here. Is equals to, write this down on your notes. 0.10. Are you seeing the difference? 0.10. Have you written that? Let me go to the next one.
Yes, sir.
So what do you think 30 pips will be?
0.30.
Good. So write 0.30. 85 will be what?
0.85.
85. Good. So this is what you'll be adding to your entry price or subtracting to get your profit level. 100 pips will be what? Take a guess. Let me see if you get this one.
0.100.
Hold on and check how we're moving. Did I do this JPY pair in that video you watched? Did we get here?
No.
No, okay, I think that recording stuff. Okay, great. So 100 pips on this one will be what? Notice that we'll be moving from left to right now. So this time 100 will be 1.00. Let me just give that as full.
Okay.
Do you get now?
Yes, sir.
So write this down. 100 pips 1.00. 120 pips. Let me see if you know maths more. Wait. So 120 pips will be what? Take a guess.
1.20.
You already know what is. You know what 100 is adding. So 120 will be what?
I said 1.20.
Good, exactly. 1.20. So 150 will also be what?
1.50.
Good, 1.50. So these are like basically, so this is what you're adding. This for any JPY pair. But where the issue is, you need to know how to add up. What do I mean by add? Let's say they gave you an entry price for entry price. They gave you entry price for a Japanese pair. You're now seeing something like 123.65. This is the entry price. You're now saying you're going for 20 pips. When you are placing the zero, you know you have to, 20 pips is 0.20. You have to align it with the decimal place. So 20 pips will be this where you place the first 0.20. The points have to be under each other. Do you see the way I placed mine?
Yes, sir.
Because some people, when they add in, they do mistake. So because if I add this way, the next line will be the way I'm supposed to have 123.85. You know, the way they add in maths. If I follow 5 plus 0, 0, 6 plus, I bring it down like that. I've seen people, they'll go and arrange that 0.20 anyhow. So they're going to get a strange number, and that will not be correct. Remember, I told you, if you want to send 10,000, you go and put 100,000. Maybe where the market is supposed to get to is that 10,000, you put 100,000 there. Other people have gotten to 10,000, they've taken profit. You are still waiting to the day to get to 100,000. You wait till Jesus comes home. Do you get? So you don't want to make that kind of error. So do you understand this JPY pairs now? The pips calculation. Good. Now let's go for the third one, which is, I gave you a scenario of an albino. That albino now is pips calculation for gold. Pips and I think was after that we'll stop there for today. Pips calculation for gold. Now, gold is were you a science student when you were in school or a commercial? Arts. Okay. As we were in science students, you know the way they used to say water, the element for water is H2O. The one for gold is AU in science too. So, but in Forex, we now add X. That X is what represents Forex. So you see XAU USD. Anytime you see me post this on my status, what it means is I'm trading gold. And oh my God, how I love to trade gold. So this is like the gold versus the USD. Now I've added XAU USD. Do you understand? So, but gold is XAU in Forex. Now, remember everything about an albino is abnormal. When everybody is saying in the day, albino is seen at night. Hope you remember. So 10 pips for gold will look like this. Write this down. Look at my screen and pay attention. 0, 0, 0, 0, 0, 0, 1.00. Can you see that on my screen? Are you seeing my screen? Good. That's 10 pips. So let's say gold, you entered a trade at 1784. If it changes to 1785, 10 pips. If it was some normal currency, it would have been 1 pip. But in gold, this thing you're looking at is already 10 pips. So at least on the broker use, this is how the calculation goes. I hope you understand. So 20 pips. What would 20 pips be? Tell me. Oh yeah, 0002.00. Good. 50 pips. Oh, sorry, 55. Let me see if you get this right. 55 pips. Take a guess.
0.0055.00.
Wait, 00. No, you missed it. 05.50. Did you notice where the unit fell to the other side? Pay attention. Now, 100 pips for this one will now look this way. This one is also moving from left to right. 100 pips will be equal to 0010.00. Did you notice? Good. So please write that down. Let me see if you get 120 pips. Let me see if you are it is sharp. 120 pips. What do you think that would be? Waiting.
001.00.
Good. 0012.00. Exactly. So that's also if it's and pips gold is so good that in one day gold can give you 3. What am I even saying? In just one move, you can get like 300 pips on gold. And that's money, a lot of money. Don't worry, when we go into lot size, you know what that means. This will be 0030.00. Exactly. So let's stop here. Now write this down as a topic against next class. This is what we're going to treat in the next class. Right, lot sizes. Have you written that down?
Yes, ma'am.
How to modify trades.
Okay.
And formula for CP and stop loss.
Huh?
formula for TP and stop loss?
I didn't get that.
Okay, just don't worry, just stop at how to modify a trade. Inside the how to modify a trade, I'll give you the explanation and give you what I just asked. Let's see.
Okay.
So what I'm going to do, I'll give you a video to watch,
Okay.
right, against this topic, so that by the time I start taking it, it will be fast for us. And if possible, if we are very fast, we can enter the next topic that same class.
Okay.
So that will be on Friday. Tomorrow is already Friday, Sefshi.
Yes, ma'am. Tomorrow is Friday.
Because we didn't have this class on yesterday. So see you tomorrow.
Same time.
Eh?
Same time.
No. I'm having some other batches at that 3 tomorrow. So maybe
Okay.
your own will be at either 1 o'clock or 5 o'clock. Pick one time between 1 and 5.
I'll communicate tomorrow.
Okay, no problem. So now another thing about Forex, if you learn, though this one now you've had it twice, so you should stick. Anything you learn for the first time, if you don't read within 24 hours, you forget to. So just be like abracadabra. Do you get it? So you want to go this kind of guidance through for more. Have an